Good morning, everyone, and thank you very much for joining me. This is the morning market review. It is Tuesday and it is the 19th of September. My name is Russell Shaw. I'm a senior market specialist at FXCM. I want to draw your attention to my email address, rshaw@fxcm.com. If anybody wants to contact me, certainly use that email address. By the way, I usually respond within a reasonable time, but I'll always respond. If you don't have an answer for me, just check in the spam folder. Sometimes I found that the emails go through to spam, so just double check those. Let's go ahead and bring up the disclaimers. And what we got here is the high risk investment warning. I'll keep this on screen for a few moments. Hey Raj, morning to you, and it is a pleasure. Good morning, James. Hello, Kim. Good morning. Pleasure to have you on the webinar. Thank you, everyone, for signing in this morning. It is much appreciated. All right, just bringing up our commentary disclaimer. Right, and just finally, market scope and trading view. I think we'll start off with market scope today. One of the instruments that has been very much in the news is oil. I thought it would be a good idea for us to look at oil. We'll do a top-down approach here, and okay, starting with a monthly chart. What I have here is a green 5-month exponential moving average. I've got an orange 10-month exponential moving average, and you can see that they are crossing bullishly. See that? Right over there, crossing bullishly on a monthly, right? And take a look at the RSI. It is popping above 50 now. That is clearly it's a bullish crossover. I think it's quite worrying in terms of what oil is going to do to inflation. This is this chart is Brent. We're already at $95. It's moving very strongly. If we go down to the weekly chart here, we've perhaps haven't spent as much time on oil as perhaps we should have, but we did catch it early. We did catch it. We caught when it started moving up round about here, and we have put in the higher trough, higher peak. We have seen that the RSI is moving nicely between 50 and 80, and the trend is up. Take a look at the 30-week moving average. The 30-week moving average also moving up. So you've got price above the 30-week moving average, and you've got the moving average moving up. However, if we go and take a look at the daily chart, it is overbought. Okay, there is a lot of heat on oil. It's I think there's a little bit of a frenzy going with oil. I got to just be very careful when I say there's a frenzy. I don't think that there is any fundamentals to suggest lower oil prices. On the contrary, the Saudis and the Russians have cut supply meaningfully, and that is supporting prices. But when I say a frenzy, perhaps just getting to a stage where it's frothy. Time to take profits off the table. and some sort of pullback perhaps. And if we get a pullback, I think it's a dip in the uptrend. So I don't think, again, I want to reiterate when I say frenzy, perhaps getting to a point where if we participate now, we might be participating at the apex of an impulse move, and we might have to just be very careful. There might be some sort of corrective action before the next leg higher commences. But certainly, you can see a very strong trend in oil. And if we take a look at this on an hourly chart, again, today it has moved into the upper quintile. The stochastic has moved into the upper quintile. When we get these moves into the upper quintile, that's where the big swings take place. So we might get some sort of swing today. It looks as if we are grinding our way up to $100 per barrel. Again, I think you've got to be very careful just with this overbought condition. I'd be more comfortable if the RSI was below 80. So any sort of pullback here, to me, would be a more comfortable position. But you can just see that oil in of itself is looking very strong. You can look at US oil, which is the US benchmark, West Texas Intermediate, and would have a similar structure there. If you take a look at it on the monthly chart, it's bullishly crossing, RSI popping above 50. This is on the monthly, right? So we're looking at really longer term sort of trends here, and the longer term trends generally driven by underlying fundamentals. What's the underlying fundamentals? Yeah, well, there's actually two sides to the fundamentals. The one side is that constraint on supply, and of course we actually have record demand as well for oil, and China's been sort of sputtering along. If China starts chugging along at a decent pace, that demand increases even further, and that's another impetus for higher oil prices. Take a look at the weekly. Okay, this is a different way of looking at it. The red is what we call distribution. The green is what we call accumulation. And clearly here we've got supply, less supply and excess demand, so to speak, and it's really pushing prices up. So UK oil, US oil, both looking very strong, but I just feel the daily charts are flashing red flags in that there is heat that probably needs to dissipate. Kim asking, how do we trade US dollar Canadian if both are going up? Well, the Canadian, yeah, Adrian, this is going to be bad for inflation. There's two hits actually. There's two hits to inflation here, Adrian. If you're outside of the US, one hit if you're in the US. The hits would be a stronger dollar because oil is priced in dollars, right? So as the dollar gets stronger, regardless of what's happening on the oil side, we are getting we're going to get hit from a devaluation or depreciation of the currency, and then the second hit is, of course, well, and the oil price is moving up. So yeah, this is bad news for inflation. Definitely something that the Federal Reserve is looking at because it's going to affect headline inflation, but not just Federal Reserve. This is going to be a problem globally. Let's just go to US dollar Canadian. This is Kim asking, well, if oil's moving up, how do you trade US dollar Canadian? You just go back to the charts. What are the charts telling you? Okay, because the charts, there's three pillars of technical analysis, I beg your pardon, three. One of them is price discounts all available information. The other is price moves in trends. And the third one is market participants' behaviors is consistent and constant. So the idea here, Kim, is, well, the oil prices should be discounted into the prices of the into the loonie pairing. So the oil price definitely helping loonie over the last 2 weeks. So you can see US dollars pulling back against the loonie pairing here, against the loonie, I beg your pardon. So US dollar Canadian over the last 2 weeks coming down. I would suspect over the last 2 weeks, if you go through to US dollar, if you go through to the US dollar, okay, you can see that the US dollar has been relatively strong over the last few weeks. And okay, it's been relatively strong over the last few weeks. When you take a look at the US dollar to the loonie, okay, then the Canadian dollar definitely benefiting from the stronger oil prices. But it's not, the technicals here are not simple. We've got a trough, we've got a peak. Okay, we've got a trough and we've got a peak. It's pulled back towards the 30-week exponential moving average. The RSI is above 50. The question, of course, is do we get the higher trough here? And what would be interesting is, of course, if we do get a pullback in the oil price, because remember we did say that there is some heat on the daily, then maybe we get some sort of push that way. But it's a complex pairing. Let's go down to the daily chart. It does favor the Canadian dollar. US dollar is below, US dollar Canadian is in zone 3. That's in the lower blue, the lower red. And you can see that the RSI is below 50. Okay, so I would say, Kim, this is quite a difficult pair to trade. Why? Well, the weekly chart seems to be showing signs of bullishness, albeit the last 2 weeks there's been some corrective action. The daily chart, I'm not sure they're syncing up. Remember, what we want to do is we want to sync up the time frames. We really want to work the probabilities in our favor. So if you've got US dollar that's strong and you've got Canadian dollar that's strong because of the oil prices, is it worth really trading that? Don't you want to be looking at something that's got relative strength versus relative weakness? That makes more sense rather than going to two currencies that are both showing relative strength. That would be really making it much tougher for yourself as a trader. But as it stands, we are in zone 3. Okay, we are getting to a point where it does seem that the loonie pairing here should certainly taking the lead, and we've got the stochastic of the pairing moving into the lower quintile. So it does seem that US dollar is depreciating against the Canadian dollar. Okay, so the idea here is, of course, it does seem as if any sort of rallies here perhaps would be attractive, and you participating in the oil market by trading US dollar loonie. Loonie's got a relationship to the oil prices because it is a commodity currency, with a big commodity coming out of Canada, or one of the big ones would be oil. So the idea there is that the oil price is helping the Canadian dollar. The reason it's called the loonie, by the way, on the one Canadian dollar coin, I think it is, there's a picture of the loon bird. So that's, I don't know if that helps at all, Kim. it does look as if the Canadian dollar is benefiting from the oil price, but US dollar is strong as can be as well. So you're pitting two strong currencies against one another. All right. By the way, we must also just Kim saying that he's short at present. Okay, so then you're benefiting. Okay, from the oil price. Okay, good. That's excellent. Just bear in mind, and this is just for all majors, that tomorrow evening our time, the FOMC is going to be releasing its statement. There's going to be a press conference as well after. It's unlikely that the Fed raises rates, but it's quite likely that there is a hawkish tone in the statement and in the press conference. I would expect Fed Chair Powell to really carry on the theme that we saw coming out of Jackson Hole, which was that inflation is still too high. So I think the dollar has still got some support. I think the dollar still got a bid to it. But of course, these central bank meetings are always volatile. So just be aware that's tomorrow. So anybody that's trading and you're trading a major, you're going to have to take note of what's going on with the FOMC tomorrow. All right. We haven't really looked at the US indices for quite some time, so I thought that would be quite a nice change up. And I want to go through to the S&P 500. I want to bring the monthly chart up here, and again, I want to work from the top down. So if we go through to the monthly chart, we do have the S&P 500 in bullish mode. What do I mean in bullish mode? Well, its green 5-month exponential moving average is above its orange 10-month exponential moving average, and the RSI is above 50. So by and large, it does seem as if we've got some upward drive there. But when we come down to the weekly chart, we do see that the momentum is starting just to wane somewhat. How do I know it's starting to wane? Well, I've got the peaks and troughs here, and the peaks and troughs measure the trend. And then what I've done is I've put a back trend line which measures the momentum of, let's call it trend 1, and then from HP2, HT3, and HP3, we can actually get a movement up here, a kind of a shift up in gradient from the black trend line to the orange trend line. That signifies a shift up in the momentum. So between March and say July, the momentum in the S&P 500 shifted up, but now what's happening is we are seeing that the momentum has pushed down. How do I know it's pushed down? Well, the orange trend line's been broken. Okay, the orange trend line, but that's not a trend change. The trend is still up. If we go through to the monthly's got a nice upwards trajectory. It's just on the weekly chart we're starting to slow down here, and we just want to be monitoring what happens on the weekly with regards to the S&P 500. It is above the 30-week moving average, and the 30-week moving average is pointing up. We are above 50 on the RSI on the weekly. It's just that we've got a lower peak that's coming here. So a slowdown, and what I would like to see is something that looks like this. I'd like to see a trough, a peak. I'd like to see a higher trough here, and then I'd like to see the next leg actually moving up. But we've got a problem. Okay, we've got a problem. And what's that problem? The problem is interest rates. Okay, the interest rates are high, and we'll just quickly take a look at TradingView, and we've seen this before. This is the real rate, and the real rate is moving up. Now, what tends to happen when interest rates are moving up is they tend to act against the risk market. So that's why we're starting to see the momentum starting to flounder somewhat in the risk market, that S&P 500 starting to feel the pinch of the higher rates. So tomorrow's FOMC meeting is going to be very important for us. We must pay attention, and we're going to have a lot to say on Thursday when we've got more information. Similarly, if we take a look at NASDAQ, okay, let's just bring up NASDAQ 100. Okay, we've got the uptrend, and what we can do is we can just put in the black trend line, and here would be the orange trend line. And you can see this just changes from black to orange. Okay, you can see that the orange trend line has been broken to the downside. Let's just clean this up. Take out these labels. Okay, we're just getting the lower peak here. And again, it's the higher interest rates that are acting as a headwind against the risk markets. So we just want to watch that. If there's going to be some sort of communication out tomorrow that suggests higher for longer, I think the second half of the year is going to be not quite as good as the first half for the risk markets. So the communication tomorrow, just to reiterate, very important. Yeah, okay, Raj is just reminding me to go through the indicators. Let's do that now. Let's do that now, and then we shall end off. So on the weekly chart, I've got a 30-week exponential moving average. Okay. The RSI I use here is a 10, and I use 80 and 20 as the overbought, oversold, and it is calculated on the median. Just puts in a bit of a smoother RSI. Okay. If I go through to the zones, just to show you guys very quickly, these are Bollinger Bands. The red Bollinger Bands are 20, standard deviation 2, and that would be your red Bollingers. Take the solid, take the moving average out. Okay. The blue one is 20, and then the standard deviation is 0.75. RSI, again, 10, based on the median, 80 and 20. And the exponential moving averages, 5 for the green, 10 for orange, and the stochastic is 15.55. So those are the primary indicators. I'll do them again tomorrow. I felt I'm rushing a bit towards the, because we're right at the end of the webinar today. So Raj, I hope that helps. Man, I hope that helps. I will do them again tomorrow. Okay, they slipped my mind today. So those are the indicators. This video will go into YouTube, so you can re-watch. I'm going to redo them again tomorrow because I just feel that I rushed through them this morning. Are there any other questions there? All right, I reckon we can wrap up here. Thanks very much. Join me again tomorrow, and we'll also do the Crypto Minute tomorrow. So looking forward to that. Have a great day ahead, guys. A great evening. We'll chat tomorrow. Thanks very much, guys.